Recording in progress.
All right. I believe you can hear me.
Yeah. Good morning. Can you hear me?
Yes, I can hear you. Good morning. Can you see
Yes,
my
I can
screen?
hear you now.
And you can see my screen?
Yes, I can. Yeah.
You can see my screen, right? All right. It's been a while. Happy Sunday and then happy new week.
Thank you.
All right. So yes, I believe you have some notation, very important. If you don't, you should make arrangement for one. You should make arrangement for one if you don't.
This is
I will need you to document missing. Sorry? Your voice is breaking.
yeah, I have my materials now. I can hear you. Can you hear me?
Okay, so yes, I can hear you. All right, so we are looking at this is odd CHF. I believe you have I've sent you a link for this particular ASIC for this particular website. It's called tradingview.com. I'm dropping it on the right.
Yeah.
Trading.com. So it's dropped right now. Upon a certain, let me know if you have done that. All right, so about this tradingview.com. Tradingview.com is you have to analyze the financial market. You have available to analyze the forex market, and not just the forex market. Once you understand how to navigate around the tradingview.com, then bless you, you can actually analyze the crypto market. You can analyze the stock market. You can analyze the bond market. You can analyze Twitter, oil, any other market that is in vogue, all right? Because the same format, the same idea, the same knowledge, you're learning mostly the central analysis for any financial market in the world. So if you understand how to analyze the forex market via the tradingview.com, you definitely have a view or a clue or an understanding of every other stock market. You can also analyze the New York Stock Exchange market, etc., etc. All right. So the forex, the tradingview.com comprises of a total whole button of analysis. All right. But we concentrate our focus alone as regards to why we're here. That is the forex market, which is the largest financial market in the world. If you've opened the tradingview.com, you let me know, please.
All right.
Okay, talking about that right now, there are columns around here I wanted you to look at. You can see my tools box. You can see my icon running through this at the left edge of my screen. I see what I'm doing.
Yeah, I've opened. I've opened it already.
All right, good. So screenshot your interface and send on my page. Let me know. Let me see what it looks like on yours.
Okay.
You can screenshot and send on the Zoom platform, or you can directly DM me on WhatsApp.
All right. I'll send it to you on WhatsApp then.
All right, no problem. So I'll be there to view it. Okay. Okay. Have we done a bit of this before? I think we have, right?
Yeah, we have. You actually sent me a link
Oh,
on
I
YouTube.
did. Okay. Yes. Yeah, I think I did that. Okay, you went through those videos on YouTube, right?
Yes, I did.
I'm so impressed what I'm seeing on your chart. The indicators. You really, yeah, it's good. It's good. All right, so that was really saved me a lot. That was really saved me a lot. I love this progress. All right, quickly, I work based on what you know right now. I work based on what you know. So I believe you went through some videos and then they've broadened your knowledge already in some areas. Yeah, and I'm really impressed about that. So basically, you tell me right now what you feel like we're doing already here. I believe you went through the concept of trend.
Yeah, I did.
Okay, so let me know your flaws around trend. Okay, let me know your flaws and then know what I need to brush up on trend before we proceed to the next. So can you just give me some of the few things you grabbed? Did you get my question? Yeah, can you hear me?
No, I did not.
All right. I said you went through the concept of, I know you do. You went through the concept of trend, and then for me to actually know exactly what to help with or where to come in, I need to know or I need to understand what you've done and areas where you find where you're not forthcoming and areas where probably you need more emphasis on. So basically, briefly, tell me or briefly lecture me what you understand trend it's all about. The concept of trend. Yeah, I'm waiting. Talking about trend, right? I lost you. Did I? Yeah, I did.
Recording in progress.
Yeah, can you hear me now?
Yes, I can hear you right now.
Okay, from my understanding, trend basically is the movement of the market on a chart.
Okay. The movement of market on the chart. Good. And that is actually.
Sorry?
Yeah, I'm listening.
Okay. Trend either goes up or comes down.
Yeah.
That's what I understood.
Okay. You didn't come across any rules of a trend?
Any rules?
Yeah. Did you come across any rules? Any trend rules?
Trend rules. So I think I jotted it down. Let me see.
Let's go over that. To be honest with you,
yeah.
Remind me again of your name. Please remind me again.
Favor.
Favor, yes, please. I'm sorry about that. Okay, Favor. To be honest with you, I want to teach you Forex in a way that you become the faculty of it. You don't need to reference something to run a brief analogy of what you know. because that is how it should be. That's how it must be for you to be profitable. You don't need to always go back to your notes to execute a trade. You need to look at a chart and remember everything you need to do on that chart professionally. I mean, this
Right.
yeah, trading the financial market is not something you need a garbage in, a garbage out, or you need to write a documentation or write a presentation to submit to someone to do. No, it is you and the market. So looking at the market, you should understand the rule to apply at any phase and at any duration, at any point, to effectively produce results. So remember also, we're going to be looking at several other concepts, not just trend concept. So if the market structure of a particular given week, of a particular given trading day, is giving you a trend formation, that means you have to know that you're applying every rule on a trend on that, and not just every rule on a trend. You also need to be vigilant to know when other formations comes in. Formations like chart patterns can come in and dominate the financial market for that particular moment. You know, we're trading HFX, and it only means high frequency forex. That's a minute. So any particular pattern that dominates a market within a minute actually takes positions. And if you don't understand what happened at that particular phase, you end up losing your hard-earned money. It is that way, and that is where a lot of people lose money. So I will need to digest everything I will talk about, everything we know, not just on your book. Let it rest on you. Let it be part of you. Let it be you. Let it be your life. That is why you should do this every blessed day. This is you. This is your career. This is who you want to be. You want to be a digital tech lady with a professional skill, very lucrative, one of the most sorted in the whole world. You do that with pride. Right now, we have some very, very basic rules of an uptrend. Now, you mentioned to me earlier on that a trend is a movement in the market, either up or down, which I do not, which I of course I do not disagree with you. You're very correct to mention trend like that. So you said trend is movement in the market, up or down, right? This is what you mean by up, right?
Yeah.
Yeah, this is what you mean by up. So because this there is a wave going up and down, but majorly maintaining its up momentum. That is, if there's a drop, it is still maintaining a particular formation. It is still maintaining a particular direction, which is upward. So no matter the wave up and down, it is still going up. So you classify that because this is happening, you said that this is an uptrend, right?
Yeah.
Yes, and you're 100% correct. But then there is what we want to know now. Now, this trend, these formations, up, and down movement, won't be complete or won't exist in the first place without a particular pattern. Now, let me take for instance, how would you know? Let me take for instance, how would you know that, for example, we have something like this, and up, right?
Yeah.
And up, and then we have another trend dropping. Maybe you met this particular way at this point. You met it here.
Yeah.
You met this opening of this candle at this point. How would you know if this candle is still going to go up at the close of it, or is going to continue down? Remember, every formation begins at a point, right? Begins at a spot, right? So if probably you met a trend, the market is closed at this point, probably you met a trend. All right, let's use this for instance. Let me use this candle. Let me put in my chart so you can see exactly what I'm trying to show you. Hope you can see the chart boldly, right?
Yeah, I can see it.
Now, let's say this candlestick, this white candle at the top here.
Yeah.
All right. So from the very, you know very, very well that all of this has been an uptrend.
Yeah.
Look, let me draw a line. You know fully well that all of this here has been an uptrend.
Yeah.
All right. So the opening of this candle, this white candle right now. Remember that if a bearish candle, which is a candle that is dropping, that is dropping, a bearish candle is a candle that is dropping, that is falling, right? And a bullish candle is a candle that is going up, appreciate, strong, going up, right? A bearish is a candle that is going down, right? And bearish candle majorly form downtrend, bullish candle majorly form uptrend, right? And then you've seen this candle here dropping to this point, closed at this point. How would you know? Basically, seeing that the whole trend has been on an uptrend. How would you know that this candle would still continue a dropping, or will still continue a drop along that same zone, canceling a trend or almost interrupting an uptrend or an existing trend? Now let's talk about those and then point them or align them or connect the dots to the trend rule. We're talking about trend for now.
Okay.
To be honest, I'm so happy that you went through those videos. So whenever we're refreshing it or whenever we're talking about a concept, it's not so strange to you. It is you can easily absorb, you can easily digest it, and you can easily your eyes are open to questions because you've watched some recorded clips that talked about this concept, and then you're back on it, and we're doing the practical way on it on the chart. So let's take for instance that we had this drop. Of course, we had this drop previously. The market is closed, and we had this drop at 2040 on Friday, November 23rd. This drop happened, and then another drop followed it. Now, by the end of my introductions and training with you on all the concepts you need to know, you would understand candles we call rejecting candles and reversal candles. You will know their roles in the roles they play in a trend and the roles they help a trend to build up. This particular candle right here is called an engulfed candle. An engulfed candle. And it has high potential or high probability rate of moving downwards 3 candle rows. It is called either up or down 3 candle rows. There are what we call 3 candle rows in a trend. It doesn't mean it must complete those 3 candle drop, but there is a projection that it must hit within the 2 or 3 candle ratio drop. Now, whenever a drop like this happens, you have to know that you're suspending a particular rule. Now, let me talk about the rule, then we'll come back to this. Now, on uptrend, on your note, you can put this down until when you get very, very conversant with it. For an uptrend. Rules for an uptrend. We're talking about one. There must be a recorded market structure in in patterns, higher lows. All right. So the first rule I want to project here is, you can see this, right?
Yeah, I can see it.
All right. The market must record a pattern or a formation known as higher highs and higher lows. But for these higher lows and higher highs to form, the market must generate a pattern. I want to show you practically on here. Is now here. This is an opening. Let's call this a candle 1. See my stroke?
Yeah.
This is a candle 1, opens. A candle 2 drops. A candle 3 opens. A candle 2 drops. Now let me explain this. From the first candle here, which is a high. Are you there with me?
Yeah, I'm with you.
First candle, which is a high, and a drop candle, which is a low, or a retracement candle. Listen to this rule. When I wrote in here that the market structure must have a pattern recorded in forms of higher highs and higher lows. This is the high. The first candle is the high, and the retracement candle is the low. Okay? The rule, listen very attentively now. The rule here is the low of every candle must not be lower than the previous candle. Now, this is the low of the previous candle, or you can say that this is the low of the current candle to this particular candle. Let me repeat this. This is a high. Let me use my new pattern. This is a high, right?
Okay.
This is a low, right? This is another high, another low, another high. Now, what's the rule? This is a high, this is a low, this is a high. Now, the current low must not be lower than the previous low.
All right.
Let me go back again. I want you to understand this very well. This is a high. This is the current low. This is the current low. It's dropping. It's dropping. So it shouldn't drop below the previous. Yes. Yeah. So if it's dropping and drops below the previous, there's a chaos. So it should drop and close somewhere above here. And another one opens and goes higher. This is and this is another low. This next low must not drop lower than the previous low, than this other low. So we should have a pattern in this formation. Here, 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 here. Something like this form. So we at the end, we should have something like this. Okay. We should have something like this. Okay. We should have layers in this form. Just like you're climbing a staircase, right? Now, it should be like this form, in this pattern, to be considered first an uptrend. You understand the point? Yeah. If it doesn't have patterns or formations like this, we cannot consider it an uptrend. This rule is permanent, is stable for every market trend. In a situation where the market does something like this, there's a breakdown of rule. Why? You saw why, right? Can you pinpoint why for me?
Yeah.
Go ahead, please.
Because the current, can you hear me?
Yes, I can hear you.
Are you here?
Yes, I can
Okay,
hear
the
you.
current low is actually lower. No, the current high is higher than the previous high.
You actually gave me a very nice point. From the very answer you were trying to mobilize to me. And I loved the formations and the patterns. In fact, the language was perfect, right? Sorry.
Okay.
Yeah, it is the current low is lower than the previous low. The current low, this is the current low, right? This is the current low that broke down this area, right?
Okay.
You understand that point, right? So it
Yeah.
broke down this area and broke below the previous low at this. You understand? Okay, let me look for something.
Yeah.
So it broke around this low. It broke this low and is now around here. Okay. So for that reason alone, a rule has been broken, or a rule has been interrupted, or a process, a pattern, and that leads to chaos in the financial market. So once a pattern like this happens in the market, you automatically, as a trader, you independently switch role because an uptrend has been interrupted. You now probably focus on a different pattern that might form in the market. I repeat, whenever a chaos or whenever a breakdown of law and order happens in the market, it leads to chaos and therefore suspension of that particular, just like in a setting or in a country where there is, oh, I lost her.
Progress.
Favor, you can hear me? I lost you. Can you hear me? 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 Can
Yes,
you
I can
hear
hear
me?
you.
Your network is really doing us a lot of harm. Because each of our sections is scheduled for just 45 minutes. That's why we should always have this section Saturdays and Sundays. It's twice a week. So you have something to interrupt or grind through the week. To be honest with you, what we do here is 2% of your progress. You have the 98 works to do. So all I just need to do is introduce a pattern the right way you should go. And what I've done, or when I've set that foundation, all right, you process that particular concept over and over again. You see the word practice makes perfect. It is in Forex or in things like this that it plays a visible meaning. Once you introduce the pattern, you go over through the week. Go through your chart. You can move your chart backward. Go through them until it has become a pattern that is really familiar to your brain. That is how consistency is achieved. Therefore, I was talking about a rule in a trend, and I mentioned very, very distinguished that a trend for an uptrend. Remember, this rule only goes for an uptrend. There must be a higher high. Sorry, yes, there must be a higher high and a higher low for it to be called an uptrend. For it to be called an uptrend, there must be a higher height and higher lows, a higher height and a higher lows. Then pinpointing the rules or pinpointing the rules in an uptrend, you want to mention that the current low must not be lower than the previous. All right, that's for the low, and I have given an illustration of how that should be on your chart. And once there is a contra happening, so a contra event to that particular rule, then it leads to a breakdown. The next rule is the current high, or you can put it this way, the current high must be higher than the previous high. I repeat, the current high must be higher than the previous high. We'll have another section tonight, all right, 6 p.m. Since we failed having another section yesterday. The current high, are you there with me?
I can hear you.
The current high, yes, must be higher than the previous. You understand that? Now, how does it play out in the market? This is it. This is it. Now, let's say there is an uptrend. A down. Now, this is the high. Now, this current high, you can see me? Let me know if you can see the screen.
Yeah, I can see it.
This current high must be higher than the previous high. This is the previous high. This is the current high. It must be higher than the previous high. It must not be at anywhere around the level within the previous high. It must be higher than the previous high. You understand what I mean?
Yeah.
Let me explain with this. Now here. This is the previous high where it actually could push up to. And then this is the previous high, right? Now you said that this high was higher than the previous high. This other high higher than the previous high. Now the thing is, there is a close. Let's say a candle closed at this point, and there was a retracement low. The next candle moved beyond or above the previous. Let's go to the real chart. Now this is what I mean. This is a chart. Now here, we have a retracement around the zone. All this has been an uptrend. All this has been an uptrend from this zone. It's been an uptrend. Okay, there was a retracement around this zone, and then that up. So this retracement, let me show you something. This is the highest drop, the blue candle. This blue candle right now, I'm showing you. Sorry, the green candle. This candle is the highest high. And then before this white drop, which is the bearish, that drops. And then the next candle, which is this green, and you notice that it went above where the previous green stopped before the drop, before the white drop, or before the bearish drop.
Yeah.
You confirm that, right? And then when that happened, another drop happened which interrupted the whole trend formation, because the previous, that is the current low, was lower than the previous. And because of that, it continued lower.
Okay.
Because of that drop, it continued lower. The next pattern, the next candle that dropped, continued. And there are several reasons that can cause that in the financial market. That's why I'm not just teaching you the trend concept alone. We're going to learn the transition concept. We'll learn support and resistance, demand and supply. We'll talk about chart patterns, candle patterns, all right? Including timing. It's very important, yes. Now, if you even verify from this end, this drop here, there was a visible engulfing, a very visible engulfing. But that's not just it. There was a new touch beyond a real zone. We'll talk about those in demand and supply. Let's focus on where we're going at the moment. So what I want you to know exactly is there are other things that can interrupt a trend or a movement in trend outside a normal transition. But once there's a breakdown of law, there is a suspension in that law. I think then once this breakdown happened, it should have, on a common sense, should have reversed upward, but then it has broken a lower low that, of course, had it dropping. And then there is another formation that happened there. A formation we call head and shoulder, or we can also call it a retracement backward trend. It happened here, broke, continued. The next retracement dropped after an engulfing also. Once that engulfing happened, there was another drop. Now, one thing I want you to understand about engulfing is engulfing has high rate capacity of continuing a trend, at least 2 to 3 candle drop. I talked about this when we're talking about. So once an engulfing happens on the chart or on any trend, you should expect